Wonderful good afternoon. It's Wednesday and it's markets time, and I want to say welcome to our afternoon session here at Markets and Trading Spotlight community. Today we are going to talk about the stop loss against the trailing stop, and we want to talk about the pros and cons of this both kinds of stop loss. Including the following topics, what is the difference between stop loss and the trailing stop? The second one is what are the pros and cons between stop loss and the trailing stop? And the third one is how to use stop loss and trailing stop in real-time example. I hope you can make sure that you stay until the online until the end of this webinar, respectively the end of this YouTube video, if you watch it later on YouTube, when I'll be showing you how you can use on a smart way this kind of stop losses. So my name is Markus Gabel. I'm a trader, coach, mentor, speaker, and of course I love trading like you. I have experienced more than 22 years right now, and I'm a trader at the asset management Born Staubing and partner in my own company. And if you want to have more information about me or my trading style or my company, then visit my homepage, tradingandpersonality.com. In this webinar series, Trading Spotlight, I'm partnering with Admiral Markets, which is a Forex and CFD broker that offers trading over 8,000 different financial instruments through one of the world's best trading platforms, MetaTrader 504. Finally, if you watch this on YouTube, remember to like this video, share it with other traders around you, and subscribe so you will never miss an episode. Okay, guys, that was the official introduction, and let's start with this very interesting topic about the stop loss, because at the end, having a stop loss is the human part in trading. But maybe I want to invite you to my webinar because we want to have a little bit kind of conversation, and maybe you are in the mood to type in the chat box where you're coming from, where you're placed right now, so I know where are you around the world. Maybe type in the chat box. On the right side I have the chat box, I can see it, and maybe so we can feel a little bit closer to each other, and it's like having family around of us. So maybe you want to type it where you're coming from. No, this is here in Germany. I'm in Lower Bavaria. It's a border to Austria, of course. And Miroslav is coming from Serbia. Greetings to Serbia, of course. And I'm really happy that you spend your lifetime with me. Born in Romania, but live in UK. Greetings to UK, of course. I appreciate that a lot, that you spend your lifetime with me. So let's talk about this really interesting topic about having a stop loss. But first of all, let's talk about what the dictionary says about a stop loss, because today you find everything about trading in dictionary. So in the dictionary, an official way says denoting or relating to an order to sell a security or commodity at a specified price in order to limit a loss. So I have to tell you a quick story, guys, but let's finish this slide. In trading, a stop loss should protect your trading idea and not your money. Have you ever heard that? I guess it's a kind of revolution in proposition, isn't it? A stop loss should protect your trading idea and not your money. Oh, do you see there's a big difference? Maybe you have heard it the first time in your trading career. So what is the difference between protecting your trading idea and protecting your money? Okay, let me give you an example. It's a real example, guys. Really huge example and a true story. Oh, I have two stories for you. Yesterday or 2 days ago, I've read in Instagram, one of a famous guy in Japan. He's the owner of a really huge clothes dresses company, and this guy is a billionaire. And this guy tried to trade during the last 3 months. And he published his loss in Instagram. And now listen to me, this guy lost $41 million. $41 million during 3 months. I guess he has a huge account, but as you can see, a loss is not depending from the account size. A loss is depending from a human which is beyond this trading account. 41 million. And I thought a little bit about that, and I thought by myself, how many people could we feed with this money? Okay, there is a famous quote in trading. You always say money isn't gone because it has different people, but you don't have it anymore. But trading isn't gone. It's, basically, it's switched to other people. But in your account, you will miss it. $41 million. As you can see, it's a huge money, a lot of money. And this is a true story from one of my own clients. Last week on Thursday, I had a coaching with a lovely guy. He's a really famous manager of a huge company here in Germany. And we took at least 8 sessions. So I taught him about everything about the price, the trend. We talked about human parts. And then we had a coaching last week on Thursday. And I tried to learn or to train with him to draw the trend in the charts. So I opened last Thursday afternoon, I opened S&P 500 5-minute charts. And I said to him, now, go on, try that, draw the trend for me that I can see you have a good eye. You can see it very properly. And then he's going crazy and he said, oh, that's bad. I said, what's up? It's just a trend, just a chart. It says S&P 500. Please draw your trend right now. No, I have to confess something. What? I said, what's your problem? Oh, yesterday I bought S&P 500 long. And I said, what the hell? Why are you doing that? We had 8 sessions. The price was too much expensive. Why do you do that? And he said one of the worst sentence ever. He said, I thought. And I said to him, I didn't allow you to think in trading. You have to stick to your fucking rules, no more, no less. So at the end of the session, this guy, he opened a new account the day before, and he deposited 10,000 euro on this account. And at the end, and today I got an email from him, at the end, he lost during 5 hours, 6,200 euros. You see? And of course, I asked him, where is your stop loss? And this guy told me, oh, I don't have a stop loss. And I said, what's up with you, guy? What's up? Would you do the same in your job? And then he said, of course not. And I said, why do you handle this in trading? Trading is a job. You have to follow rules. Why do you work without a stop loss? And what the hell are you doing there? It's completely against every kind of rules and against everything I taught you the last 8 weeks. So as you can see, that's the long story short. This is the sentence, that's the conclusion of this story. Completely independent. It's the human part, having a stop loss, following rules. And this was my own client. And last Thursday, I said to him, you have to check your morality, because this is completely insane what you do there. With 6,200 euros, I could feed a lot of poor and starving kids in Africa or something else. And you lost this money by your own ego. What's up with you, guy? What's up? So that's a true story, guys. And you can see this is my job to teach people, but I'm not a soft mentor. I'm not a soft coach. So if you need it, I will hurt you, really, because I don't have to waste time. And you as well, I guess you don't have to waste time and you don't have to waste money. But most of the people, you can see it at the bottom of this slide. Look at the bottom. 81% of all traders lose money in trading. Why is it? One of these topics is not having a stop loss, or it's a lack, how should I say? It's a lack of understanding what is a stop loss and how you should use this kind of stop loss. This is the most important point. So let's go on. Let's see this this revolutionary proposition. A trading stop loss or a stop loss should protect your trading idea and not your money. So where is the difference? Let's see. A stop loss should protect your trading idea. So what is about my money? To protect your money, you have to use your own money management. Maybe you remember my own my webinar. You will find it on the YouTube channel of Admiral Markets. Maybe my host, thank you for hosting me this afternoon, will put into the chat the link to our YouTube channel, and you will find a couple of weeks ago I held a webinar about money management, and there you find the sentence or the expression of your own penguin factor. So what's your moving sliding factor? Where is your penguin factor? This is a kind of money management where you feel comfortable with your money, but a stop loss should, in first stage or in first sense, should protect your trading idea. So for example, if you are a trend trader, the stop loss will tell you when your trend idea is not longer valid, or in other words, the trend is broken. So let's see an example. Here you can see this is a trend trade. So I got into this trade here at this point, and I had my stop loss above this high here. Let's see. Yes, okay, I tried here, this one. So you can see there is my trend, there's my stop loss. So I got into this trade here roundabout, that was my entry, because I was speculating on a trend continuation. Because, you know, that's one of the easiest rules. And of course, next week on Wednesday, I'm going to talk about how you can improve your trading strategies and how you can use a simulator to train and to follow your rules. Next Wednesday, if you're interested in it, I would appreciate it a lot. And I would be grateful that you follow me next week again, too. Okay, so I was speculating on a trend continuation. It's one of my favorite trading strategies. I'm talking about the next week as well. And I set my stop loss above the last high. Why is it? Because if the price would go up and will have a close above this last high, then the trend would be broken, and then my trading idea is over. So my trading idea is based on the fact that a trend continuation is always more likely than a trend break. But I never got 100% hit code of any kind of strategy. There doesn't exist any kind of strategy which you will have 100% hit quote. So in this trend continuation or this trend following system, you will have a hit quote of around about 70%. It's enough to make money, of course, if you follow the rules and if you can settle down your human part. But especially to explain this point where I have to, what the stop loss, what's the function of the stop loss. And you can see the stop loss is protecting in the first sense, my trading idea, because I want to follow the trend, and the trend continuation is always more likely than a trend break. So for that, I placed my stop loss above the last 0.3. So this is my last point 3. Point 3 always means last correction point. So, and if the price will go up there, my trading idea is over. It's gone, it's done, it's broken. The trend is broken. So I don't have a trend. My trading idea, trend following strategy is not longer valid. Now you can see this is, I don't talk about money. This is a completely different, how should I say, topic. We have a stop loss. This should protect your trading idea, but I don't talk about money. Money is beyond the stop loss because you have to figure out how much money you will risk for this trade. It's not depending from your stop loss. Okay, where you will go out on the, of the trend, then you will lose that money. But basically, please guys, dive in the deeper causes. Stop using and watching the obvious things. I know people in internet or online are always talking about, oh, you have to risk 1% of your trade. Guys, this is, to be honest, this is bullshit. That's the theoretical part, because we are humans. And as a human, you think in money. You never think in percent. So let's make a very, very easy example. You go out and you lost your pocket or your wallet. Okay, you have lost it. Then you go home and you will complain to your wife, oh, I lost 1% of my salary this month. That's stupid. You will never do that. You go home and you will complain to your wife, oh, damn it, there was 100 euros in my wallet. I lost that money. So as you can see, as a human, you always think in money, not in percent. So you see, percent is completely unpersonally. So you should think in money. And therefore, you have to divide this, protect your trading idea. For that, you have your stop loss. But behind the stop loss or beyond the stop loss, there is your money management. And this is a completely different topic. So therefore, we talk about having a stop loss. In the first sentence, it should protect your trading idea. Whatever you do, maybe you have a different strategy, maybe movement strategy, or maybe you have, what should I say, 50 SMA crosses the 100 SMA. You need to protect this trading idea, because if the trading idea isn't work, you have your idea, your trading idea is not longer valid. So this is the kind of thinking. I hope you write it down for you a little bit. Then you realize that your stop loss in the first sentence is protecting your trading idea. Okay, so let's continue with the slides. If you have any question, guys, the chat, guys, is open. The chat is open. Let me know your thoughts you have in your mind. Trading Spotlight is made for you guys. Where is my mouse? Damn it. Trading Spotlight, Paul, Jens, and myself, and of course, Admiral Markets, we do a lot of effort to teach you and to help you to become profitable. Especially, this is my mission, it's my purpose of existence, to help you to become successful in trading. And this is why I want to go with you in every kind of webinar a little bit deeper. We have to switch the focus away from the obvious things a little bit deeper. But this is just, it's a little bit possible during 40 minutes. If you want to have more, then go my homepage, tradingandpersonality.com. How to get volume profile indicator. Okay, I will answer you this very quickly. So here we go, there is it. I give you this into the chat box for all of you that you can find this volume indicator. Okay, let's go on with the stop loss. So let's talk about true, and thanks for stressing on the money not. Yeah, that's true, Tawanda. I don't know where replaced, where you're coming from, but this is the real sentence. Focus on protecting your trading idea. And then the second stage, this is a completely different topic. You have to think about your own money management. Now, this is different. So let's talk the next difference between stop loss and trailing stop. And you can see I wrote it down there. Is there a difference? No, there isn't. Of course not. There is indeed, basically, or generally spoken, there is no difference between a stop loss and a basic trailing stop. So why? You can differentiate between an initial stop and a mental stop. Because the initial stop, and there is no difference between a stop and a trailing stop, this kind of hard stop, people say hard stop, or you can say initial stop, is known by the broker. So a stop loss is not a limit stop loss, unless you use by your broker the topic limit stop loss, then it's different. In a normal way, a stop loss order is not visible in the book map. It's just only at the surface of your broker. Why is it? I will explain very soon. So the mental, or I called it the soft stop, is just visible in your software or maybe in your mind. So if you work with MetaTrader 504, so you can set an alert at a special price, and I will explain why you should use that in that way. So a trading stop is a stop loss that follows your trade if your trade is in profit, and the sentence or the sense of a trading stop is to protect your profits if you are an unexperienced trader. If you're an experienced trader and you have a really, really good mentor, he will teach you different behavior of trailing stop loss. Let's talk a little bit about that. I give you a little bit insight about that. Okay, the major difference between the stop loss and the trailing stop is that the ladder is dragged upward by the trail amount as the position price rises, or maybe if you go short, decreases to the upper, to the lower side. So the stop loss or the stop loss order specifies that your position should be sold when prices fall to a special level. You set your stop loss. Let's make a quick example. Let's make this example of a share, of course. Maybe you own 100 shares of whatever, Tesla, whatever, specific stock currently trading, and you bought $90 per share. So now you want to sell your position if the stock falls down to 87. So you enter a stop loss order for $87. You bought the shares at 90 and you set your stop loss at 87. So what happens if the price falls? If at any time the price touches $87 or maybe deeper or less, then your broker like Admiral Markets will enter a market order. So now there's a deep secret. Maybe you know it, I don't know, or maybe you never heard it about. How many different order types the order book knows? How many? Think a little bit about, and maybe you have in your thought, or maybe a stop order, limit order, market order, stop limit, whatever. And now I have to say, nope, it's not. Never. No stop limit. Unfortunately, Ruben, no. The official order book just only knows one kind of order. And this is a limit order without any add, without any additional topic, just only limit orders. The official order book don't know a stop order, stop limit, market order, or something else. The things you can see, let me show you this one very quick. Yeah, let me show you this one. So you can see this is the order book on the right side. This is the X order book. So the numbers you can see there, the green and the red, that's not a stop order. It's not a stop limit. It's not a market. It's just only a limit order. Think about it. So if we talk about that you have a stop order in the market, that's a little bit a tricky thing, because the stop order means your broker knows it. But a stop order is never placed in the real order book. Therefore, if the price gets touched, your stop order goes into the book map and changed to a market order, which means you don't have a guarantee that you will get this price of 87. This is a tricky system, especially in shares. In a Forex, not really, because we have $8 billion of volume every day. But in the shares, it is possible. Maybe you want to sell 100, but never forget, guys, trading is a market. It's a trading place. If you want to sell 100 shares, you need a buyer on the other side who wants to buy 100 shares. And now imagine you want to sell at 87, but on the other side doesn't exist a buyer who wants 100 shares to buy at 87. Then you have to take the next price where the next buyer is settled down. So it's possible that maybe you can sell 50 shares at 87 and 50 shares at 86 or maybe 85. So you have a bigger loss. A market order means you have to take the price which is actually available. It's not a guarantee, especially futures, commodities, shares. So in Forex, it's a huge volume. So you have to understand a stop loss order just only exists at your broker, but not in the real order book. If the price gets touched at your specific price you want to sell or buy, then the price goes into the book map and then it's going out. And then it's like a seed which rippens out. And then if you're a lucky guy, you can sell your 100 shares. If not, you have to take the price which is available. So I hope I could explain it a little bit. So, but the time is running. And if you want to have more, it's the best thing, you take a mentor who will teach you this really, really deep things. Okay. Go on. A trading stop triggers when a security's price falls by the trading amount, maybe certain percent or dollar amount, for example. So let's go trading stop loss. If you want to, my daughter, trading stop loss, sell specific shares with a trading stop loss, maybe you will 5%. Trading stop 5%. So it triggers when the stop moves down 5% from its most recent high. So I can I will draw it in that way that I can explain it a little better. So here we go on this side. So maybe you have this one and you went into the trade, or you bought maybe here, and then you trail maybe 5% your stop here. That's maybe 5%, of course. Trading stop maybe 5%. So, and now you got in, and this is your profit here. This is your profit. So it's not a chart. I draw into the I draw it here in this slide. So if the price, great, whew, thanks God. I thought I made something wrong. Look at me, heart attack, please. I'm an old guy. I'm an old stupid guy, please. A little bit mercy with me. So if the price falls 5% down, the price get touched, then you get out. Then you get out of the market, and this is your profit. This is the sense if you work with the trading stop with percent. Okay. Maybe, let's see, imagine you buy a stock at 100 and 5% trading stop would trigger a sell order, then it falls to 95 or below. So if you enter the trading stop loss, the sell order at 95 will be a market order. Again, it's not a guarantee order. It's not a guaranteed order. It's just a market order, which means you have to take the price which is actually available. This is really important. There's a special wording. I've forgotten, damn. Maybe I remind me a little bit later. So, okay. So maybe we work with dollars. You can enter trading stop with dollars as well instead of percentage. The effect is that the position's price rise, the trailing percentage remains on a constant percentage below, whereas the percentage distance decreasing with an absolute trading amount, that's real money. So for example, your price rise to 120 and you use a $5 trading stop. So the stop loss triggered 115, which means you have it's a percent drop of 4.2%, but it's $5. So have you entered the 5% trading stop, it wouldn't trigger until the shares drop 5% to 114. So you have in amount, in spoken amount, you have a loss, a bigger loss. And let me give you a little quick advice. Stop thinking in money. Stop thinking, unless at your money management. But at the moment you work and handle and think in money, what is the consequence? What do you think? If you think in trading in money while the trade, what's the consequence? What do you think? Type in the chat box, please. What do you think? There's a special word on it. What do you think? If you work and if you think in money, what's the consequence? It's a mental thing, guys. You can easily upset. Yeah, of course, that's the point. You handle in an emotional way. That's mental conflictions. Profit and loss. The point is, you will always work and handle with wet hands, and you cannot follow your plan as long as you think and trade in money. So on my accounts, you lost focus on learning, and that's great stuff, really. If you think in money and if you trade with the thinking of money, your focus switched away from follow your plan and sticking to rules. That's the point. Think it through, maybe after this webinar, of course. And this is why what I teach to my guys. Stop thinking in money, unless at the beginning you're counting your amount, your money management. But the same, we are humans, guys. We have our wishes, dreams, hopes, fears, anger, whatever. Why? You lose 50 euros. You lose 100 euros. And then you sit in front of your desk or your screens, and then you think, oh my God, what could I buy with 50 euros or dollars? You think, and then you handle it in an emotional way. Stop doing this. Okay, guys, let's talk pros of both kinds of stops. So now, having a stop loss is absolute necessity, of course. If you work without a stop loss, you will, this is a promise, guy. This is a promise. I promise you, if you work, if you trade without a stop loss, you will never become successful in trading on the long run. Never, ever. The day will come and the market will destroy you and your account. I experienced it. I made this experience too much times, too much. Please, if you take this, only this one thought from this webinar, please always work with a stop loss. I know it's hard. I know it's the human part. So having a stop loss means it's a kind of punishment, right? Do you ever heard that? Did you ever heard that point? And did you feel it? So when you think it a little bit through, if the trade is running into your stop loss, how do you feel? Here, how do you feel? How is it? Less traders, less mentors talk about that because it's a human part. It's hard. I know that. I lost everything. Believe me. And I know how do you feel. And in the first stage, if you don't understand the deeper causes of trading, then you see a trade or stop loss like a punishment, a personal punishment. But Alexander Elder taught us this one quote. He said, the market doesn't know you, really. And if you lose money, who cares? Who cares? So it's not a personal punishment. It's a big mistake if you don't follow your rules. That's the completely different topic. So having a stop loss brings calmness and really clarity into your trading. Calmness and clarity. And this is really important. Having calmness and clarity for your trading. If you have too much emotions, you don't become successful in trading. So since the order is automatically triggered by the movement of a stock's price, you don't have to sit in front of your screens all day long. Of course not. Because the market works in the way how it works, of course. There's no cost to place a stop loss order on other markets as well. You don't have loss. Only the stop loss is triggered, and then it becomes to market order. Then you have to pay the fee for it. But it's really less at Admiral Markets, which is the best broker I know. So objectivity. This kind of stop orders to allow the investors to remove all emotional attachments. You see, that's the word, emotional attachments to a company's stock, and allow the investor to make trades based on the return on an investment goals for each stock owns. So of course we have cons. Do we have cons of stop loss? Not really. It's what you think. If you have a wrong stop loss, then there is a big con. So the main disadvantage is that the short-term fluctuation in a stock price could activate a stop price. So, and this is the human part. Ladies and gentlemen, here we go. That's the human part. People set the stop too close to my current price. Why is it? It's the human part. I lost too many money in the last trades. I want to have, please, a profit. Please give me this one profit. Give it to me. And why is it? So I set my stop and close. In the main thing, I got a profit. Please give me this one profit. I lost too many money in the last trades. So, and then there's a big there's a short-term fluctuation, whoop, whoop, and you're out. So you see, I'm a swing trader. I love swing trading. It's really calm, and they make a lot of money with that. Another thing you have to keep in mind is that once you reach your stop price, your stop order becomes a market order. I explained it already. So, but there's no price guarantee, of course. I told you about market order. You have to take the price which is actually available, which is not a problem in Forex market, which is the point you have to trade in Forex market. Stop trading shares. It's kind of investment. This is another topic. And sometimes we have any kind of restrictions that it's not allowed to place stop orders over the counter, OTC, maybe a currency, now how is it, crypto or something else. I hope you don't trade crypto. That's bullshit. Market fluctuations. In a volatile market, a sudden and unexpected short-term increase or decrease in a stock's price could activate the order. This is why almost no day trader is successful in trading. So first of all, how to use in a real-time example. I will show you now in the last 5 minutes. I will show you how I can use it. And I will use the trend trading strategy because everything, and first of all, if you use trading stop or whatever, it's based on your, depending of your use strategy. So let's see, here we go. I will use that. So now you can see, let's see, like this one. Yeah, here we go. So as you can see, I started my trade here. So that was my trend. So first of all, I got into here. Here we go. Here was my entry. There was my entry. Here was my entry. Outcoming of the correction, always the same, sticking to the rules, you know. That's the point you have to learn. And as you could see, my stop is placed there. So can you see where is my target? My target is placed always at the point of control. Here we go. So of course we know, and we talked about, use the channel, Admiral Markets YouTube channel, use it. There you will find the point with the point of control, the price, why the price is so important. So my target is always the price. So now you can see in an official way, my next correction zone is there, which means basically I had to trail my stop at the next 0.3. That was an official point. So why I didn't do it? I expect that the price will continue or will go down to the point of control. So in that case, at this official next 0.3, where my real stop should be placed, I work with a mental order or with a mental alert, or maybe it's in my wording, it's soft stop. Admiral Market doesn't know my soft stop, it's just in my mind. You can work with an alert. So why is it so important? So if you have a spike, you know spikes, then they catch your stop, the market moves down and you are out. Therefore, I work with this kind of trailing stop. My broker doesn't know. So my real stop, which is not placed in the order book, is just only a stop order. As you know, Bookmap order book doesn't know a stop order. It's placed at Admiral Markets, but not in the order book. That's a big difference, guys. So, but if the price will go up and will touch my stop loss, then the stop loss switch to market order, goes into the Bookmap and ripples up, and then I'm out. If I find a seller or a buyer in that case, then I'm out. But if they're how should I say? But if damn it, that's the English word. If I cannot find someone on this side to sell, I got no price for that. This is really deep insights of trading. So now I got a little bit, go a little bit deeper for you. How can I handle this trade, for example? It's really interesting. How can I handle it? I have a plan, guys. And I made this plan before I pushed the button. Before I opened this trade, I had my completely final plan. My target is placed at the point of control. My stop loss is placed above the last 0.3. I have a soft stop at the last 0.3. And if the price goes deeper in direction of my point of control, then I know at a special price, then I trail my stop into the profit to make the trade safe. That's all. Because I know if the price will go up so far that it get me out of the market, then I'm already in the green upper zone, and I will have a next chance. So when can you trade in that way? Only if you don't think in money. If you follow your plan, then you can work in that way. So look at this one, for example. You see, it was an amazing trade. It's a kind of movement trade. You see, this trade worked. I got in at 19th of April. And this week, I guess yesterday, on Friday, I got out. Almost 3 months. And that was, how was it? I guess that was around almost 793 pips, which means with a standard lot, almost 8,000 euros. I guess this is enough to make money. But I followed my plan. And to hold a position over 3 months, you need mental strength. That's the point. So, and this is the way how you can work with soft stop, trailing stop, and a hard stop. This is how you can use it. Let's make a quick conclusion. Revolutionary idea. The stop loss should protect your trading idea, not your money. Your money is protected by your money management. Different topic. So we can differentiate between strange word, between an initial stop and mental stop. And of course, the main difference is between that the ladder is dragging upward by the trailer amount as the position rises up. And of course, that's the final sentence. Having a stop loss is an absolute necessity. If you don't use a stop loss, you have a human problem. And then I promise you, you will never become successful in trading if you don't cope this challenge, having a stop loss. Thanks, guys. But I don't want to leave you alone with this. We have our Trading Spotlight community. I'm happy to find you there. You can, in the chat box, you can chat with us. And the only requirement, open a real account and deposit some money on it. And then on tradersyard.com, that you will find the Trading Spotlight group. I missed the first 30 minutes. I can see, yes, later on YouTube channel. So use the, thanks you, on Friday. Okay, on Friday you can use this one. So on Friday, my wonderful continuous partner is talking, Jens Klatt is talking about automated trading for beginners. If you want to have this and quick introduction to automated manual trading. And I want to say thank you for sharing your lifetime with me. And if you want to have more information, Admiral Mark is always there around of you via mail, YouTube, or Facebook. And what I have to say, my last word, thank you, guys. I appreciate a lot that you shared your lifetime with me. I hope there was something valuable, things for you. You can learn by yourself. But my biggest advice, take a mentor. Spend this money and time, take a mentor, and then, guys, you will reach your goals, your dreams and wishes on a faster way, not trying by yourself. Guys, thank you a lot. And I wish you a wonderful rest of the day, week, and maybe we'll see each other next Wednesday again. And up to this day, take care, stay healthy. And as always, be careful about your minds, your thoughts, you know, the beginning of your actions. See you. Bye-bye.